What is up, everyone? Welcome to episode 145 of Capital Talks, and we are joined with a guest today, Samantha Jane Wilson. Sammy, it is great to have you.
Hi, everyone. Thank you, Peter. I'm excited to be here.
Excited to have you. And now we're going to get right into it. We're going to be talking about job changes. So
Let's
a lot going on that front. Robert Adam Lauer transitioned to UBS Bank from Bank of America Merrill Lynch on October 17th, 2025, taking on the role of financial advisor. Based in New York City, he serves as a generalist, leveraging his extensive experience to deliver comprehensive financial guidance to a diverse client base. His background in advisory and wealth management enables him to provide clients with personalized strategic financial solutions. Anthony Michael Cox transitioned to Raymond James and Associates in 2025 after 13 years with LPL Financial, bringing more than 25 years of financial services experience to his role as financial advisor. Based in Tampa, Tony operates as a generalist, focusing on tailored financial planning and comprehensive account management for his clients. He earned an undergraduate degree in finance and economics from the University of Nebraska. Colton Montgomery Leitner founded Topwater Capital LLC after building a successful career as a financial planner and investment advisor, serving individuals, families, and business owners since returning to his hometown in 2017. As founder and financial advisor, Colton leads the Tampa-based firm with commitment, fiduciary standards, and personalized client care. He's a certified financial planner and an accredited investment fiduciary. Colton holds an undergraduate degree in business administration with majors in finance and economics from Stetson University, where he also captained the baseball team. So,
Wow.
Sammy, could you tell us what's going on the RIA, wealth management, M&A side of things?
Of course. Two Osaic advisors, John Corey Hoffer and Janine Hoffer, registered Hermitage Wealth Management as an independent RIA in Richmond, Virginia. Prior to joining Osaic, which is providing the firm with back office support and supervisory services, the duo spent more than a decade with Signature Investors, Inc. The firm has engaged Charles Schwab, Fidelity Investments, and Pershing Advisor Services as custodians. RIA merger activity has reached new heights with DeVoe & Co., tracking 94 third-quarter transactions and the industry on pace to set a new full-year record. According to DeVoe's latest RIA deal book, the quarter's deal activity was the highest level ever recorded, bringing the year-to-date total to 242 transactions,
Wow.
within striking distance of the full-year record of 272 set in 2004. Founder and CEO David DeVoe said, RIA M&A is on fire. The activity has been redlining for 4 quarters. Next up is Haley Schaefer and Brooks Schaefer. They launched Waypoint West as an independent RIA in San Francisco, with liquidity planning a central focus of the firm. Haley Schaefer previously advised institutional clients and family offices at Enko Capital and BlackRock, and Brooks Schaefer built portfolio solutions for RIAs at BlackRock, and later worked at hedge fund and venture firm Enko Capital. The firm also includes 36-year veteran advisor James Richard Schaefer Jr., who is dual registered with Waypoint and Osaic Wealth, and began serving as president of Ohio-based Waypoint Partners in 2008. Now, Peter, tell me what's going on the investment front.
I mean, there's definitely some exciting stuff. But before I get to that, I think one thing I really wanted to touch on, and you mentioned this, is the RIA merger activity. It's clearly immense right now.
It's on fire.
No, it is. And I think it's just a burgeoning asset class. And I think there's a lot of consolidation. There's a lot of mergers. There's a lot of acquisitions. And I think there's obviously an attempt to rectify fragmentations in the market. I think there's a lot of consolidation, because why beat the competition when you could literally be the competition or be a part of that and really kind of enjoy the benefits flowing from that. And so to get to investment, we're going to go to the City of Angels. So the Los Angeles Fire and Police Pension System closed $240 million in new private market commitments in September, including $30 million to Charles Bank Credit Opportunities Fund 4 in private credit, $60 million to Meridian Infrastructure North American Fund 4 in infrastructure, and $75 million each to Realty Income US Core Plus Fund and Carlisle Property Investors Fund in real estate. I think what's really interesting here, Sammy, is just something that we just continually see right now is, this hunger for infrastructure. I think right now, just I think there's this mutually advantageous situation occurring where, LPs, GPs, they have capital that they want to allocate to infrastructure, and critical infrastructure needs capital. So it's this idea of, like, I think injecting private capital into critical infrastructure to reinvigorate it, to bolster it, and to really help modernize it in the long term. But, we're in Los Angeles now. Can you take me to the searches side of things in Los Angeles?
Yes, let's do it. The Los Angeles City Employees Retirement System disclosed a timeline for implementing its infrastructure investment plan developed with NEPC. Between October 2025 and March 2026, the pension intends to approve the plan and facilitate manager selections by RFP search to award new listed infrastructure mandates. Funding and onboarding of selected managers are scheduled for March of next year, followed by ongoing portfolio reviews and pacing updates in the subsequent years. Another search is the Saugus Contributory Retirement System. They issued an RFP seeking investment managers for a passive foreign equity mandate benchmarked to the MSCI EAFE index, with an expected allocation of $15 million to $20 million. Proposals are due November 3rd at 2 p.m.
TikTok.
Eastern Time, and will be evaluated with assistance from Wainwright Investment Counsel. Now, Peter, can you tell us what this all means and what Dakota's strategic takeaway is for GPs and LPs?
Well, so I think firstly, and Sam, that's a terrific question. Firstly, institutional allocations signal continued and robust confidence in private markets. I think the appetite for private markets continues to prove insatiable. And then,
love that word.
Oh, thank you. It's one of my favorite words.
We know.
And then number two, infrastructure mandates are entering a growth phase. I think this is just something that we're just encountering with regularity. I mean, there's just such a hunger for infrastructure investment. I think that it's a stable investment. It's a lot of government contracts. So it's just something that's very reliable. And, infrastructure is truly a good and service that is always needed. It's not going to go out of style. And then smaller systems, number three, smaller systems are increasingly globalizing their mandates. So I think there's this hunger for foreign exposure. Foreign equity mandates are definitely remaining robust, and it really underscores how even smaller municipal systems are broadening exposure beyond U.S. capital markets. And so what's the bottom line here?
Tell us.
I'll do it right now. Institutional investors remain active and disciplined allocators while fundraising momentum continues globally. From Vantage Partners' record 250 billion yen Japan buyout vehicle and Patria's 2.9 billion infrastructure close, for GPs, this means a bifurcated but healthy fundraising environment. LPs are selective, but still writing checks for differentiated, proven strategies. For LPs, competitive RFP timelines and strong consultant involvement point to an increasingly data-driven and globally diversified portfolio construction trend. So, Sammy, what's going on in the fundraising updates piece?
Here we go. Africa-focused alternative asset manager Enko Capital marked the initial closing of its impact-focused private credit fund, Enko Impact Credit Fund, with $100 million in capital commitments from investors including British International Investment, World Bank Group's International Finance Corporation, SciComm Global Fund, and pension funds and family offices in Africa. With a $150 million target and a $200 million hard cap, the fund will lend to middle market companies across sub-Saharan Africa with a focus on non-cyclical sectors like agriculture, telecommunications, manufacturing, renewable energy, and financial services. Private equity firm Advantage Partners has reportedly started gauging investors' interest for its 8th fund dedicated to middle market buyouts in Japan, seeking 250 billion yen, which is $1.67 billion US, for Advantage Partners Fund 8, with in-person due diligence sessions expected to start this month and a first close planned for the end of February 2026.
Wow.
At that size, Fund 8 would be the firm's largest, surpassing Advantage Partners 7, which closed at 130 billion yen in April 2023. Andre Sales, CEO for infrastructure at Sao Paulo-based Patria Investments, said the alternative asset manager raised its largest infrastructure fund in even more difficult conditions. The firm secured $2.9 billion for the Latin America-focused investment fund, with backing from investors including family offices, endowments, insurers, and pension managers.
I mean, terrific job on the LP front there.
Thank you.
And from like the Patria Investments, I mean, seriously, the fact that they were able to get family offices, endowments, insurers, and pension managers, so clearly a lot of LP confidence there. And one thing I wanted to add too, and this is really just very fresh news, the U.S. Army is seeking private equity funding for a $150 billion modernization plan to overhaul, again, aging infrastructure, with firms like Apollo, Carlyle, and KKR
the big ones.
Yes. Being approached for projects on underutilized military land. So I think right now that's, I mean, again, it's just this push for private capital, injecting it into aging infrastructure, which is just, by the way, fresh off, right off the press. And so now Sammy, if it's okay, we're going to get into upcoming Dakota Cocktails.
My favorite part.
Oh, I knew it. No, so we're going to be talking about, so we have Toronto, October 28th, 2025, which is also my sister's birthday. New York City, October 28th, 2025. Chicago, November 5th, 2025. Have you ever been to Chicago?
I have. It's a great city.
Yeah,
Cold.
I was there the other day. I was there the other day at a Cubs game. It was definitely.
You were?
Oh yeah, it was a really cool game. No, Wrigley is a cool stadium, one of the coolest. And then we have Philadelphia at the Union League, November 20th, 2025.
Which we'll be at, right?
Yes, we will be there.
We will be there.
And thank you for coming out, Sammy. This was great.
Yeah, I had so much fun. Thanks for having me.
Good seeing you guys.
Bye.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.